Hey, good morning, everyone. Paul here at GammaEdge. Today is Friday, the 3rd of January. Let's get started. On the screen right now is the MTM, and the overall picture is as shown with the red. Basically, we had a failure on Tuesday where we crossed underneath the what we call the railroad track pattern. We call it the railroad track pattern for obvious reasons. As the trend goes in one direction or the other, they become parallel, and living below that is generally not a good thing if you're a bull. If you're a bear, it's a good opportunity to get engaged and get in motion. The white line is the instantaneous cumulative tick. It's a real-time signal of buying and selling that's in the market. And you can see that it was linear down for a good portion of Tuesday, and then yesterday we had that same thing in the early afternoon session when it started to stable out into lower afternoon. But unlike what price did off the lows yesterday, the CT did not recover at the same magnitude. Why that's important to everyone is that there is still net selling risk off in the market. So we've got a lot of room to make up if we're going to get bullish here. And the takeaway is that we are more inclined to sell the rips, and that will change, of course, if we can get the CT up into this area and get it crossing the railroad track. But for now, any bounces, we're going to have a bias towards the downside. When we start taking a look at the different instruments, this is the SPX PM complex. This is everything turned on in terms of all the expiries. And why this is important is that here's the GEX transition that the system automatically generates. The first thing that should jump out at you, it's very fat, it's very wide, not really deterministic. And this means there's uncertainty even in the SPX PM complex. Why that matters to you, it's cautionary, right? And so you can see this yellow line, which is the closest price to where we closed our last print last night, and you can see it's at the bottom of that transition. And if you look up the net OI column, you can see that we're put dominated. That's what the red here means, and we're put dominated all the way up to 5,900. So broad picture, 50,000 foot view, there is a lot of weight in the overhead. Why? Because if we're put dominated in the right hand plane, at least in this area all the way up here, that means these are in the money, and there's probably charm associated with them, although all the expiries are turned on. We don't know what the composition is here. But the important thing to realize, until we get above 5,900, we don't have a chance in Hades of really aggressively moving up. We've got to get above 5,900. The other key thing to realize is that to get above 5,900, we're going to be unwinding quite a bit of gamma here. Now again, all the expiries are turned on. But broad picture, 50,000 foot view, we need to clear this level, and your eye can immediately discern, oh, we start getting into some greens. Weak greens, which means they're call dominated, and there are pockets where the in the money puts are still controlling the strike. But you can see things start to repair once we get above 5,900. So again, the broad view of the SPX PM all expiries is just to give you an idea of where major shifts in the market are likely to occur. Keep that in mind. Write it down on a piece of paper, something. If we're above 5,900, the scenarios start to change a little bit. This is what I post this morning in the SPX game plan. This is the 0 DTE. I've also inlaid the net stat chart in here. Again, 3 and 3 to 3, so January 3rd, this is just the single expiry, and you can see it confirms there. There's a lot going on in this chart today. It's not a clean structure. Sometimes we see, like in the gamma transition for the 0 DT, it's very, very tight like this. The thing that I want everyone to realize is that we've got some really weak strikes in here. So this can actually expand, and it's not, it's not a slam dunk. Now, the computer, the AI here, or the algos here, they found this very, very tight range for GEX transition. Take it, right? There is clearly something that is going to happen above and below where we are here, and it's probably not a coincidence. That's 58.90, 58.95. Okay, so that's pretty cool. So we said earlier that 5900 for the broader complex is where we want to pay attention, and sure enough, we've got a large call dominated call dominated strike there at 5900. You can see above 5900 in the 0 DTE, there's virtually no pressure, right? We're back and forth. We have what we call a gamma node up here, a delta node, that type of thing. And why this is important is that if we are able to get above the 5900 strike, then we could stall in the absence of strong volume. So we want everyone to watch vol U and vol D to once we clear the 5900, if we clear the 5900, to watch and see, do we have a lot of action? Are we pointing up? Are the chopsticks pointing up, et cetera, et cetera? The next level that we perceive as a real opportunity is going to start materializing right around 59.15. Above that 59.15, we get up into this area where you can see that from a 0 DTE perspective, we are relatively the same magnitude, kind of a flat line here. We call this a plateau. Once we get up onto that quote-unquote plateau or get up over that ledge, market action most likely will just grind us upward. First of all, we're going to have a lot of calls that are going to be going in the money, and that's going to be accretive to charm, and it's going to shift some numbers here. And what we're going to start seeing is we're going to start seeing the charm component in the left-hand plane most likely flip from OTM puts to ITM calls, and once this goes ITM calls in the left-hand plane, then you've got this support that will push us upward, and we'll be looking for that as we go through the day. We do think that once we get up here to 59.50, we're going to have a hard time making any more forward progress unless there is a considerable amount of activity going on within the volume, intraday volume. And the reason for that is you can see, and I drew the line right here at the 59.50, you can see there's a huge change in the context of the puts. These are all in the money, and as this line comes up, they're going from in the money to out of the money. We're effectively removing deltas from the book, and that's going to be accretive also to moving up. But the impact of that shifts a dramatic amount here, right? We're going from thousands of contracts to hundreds of contracts. So above the 59.50, if we're going to get up this gradient that exists right here, and you can see we're going from 985, 203, 33.58. If we're going to get up that gradient, it's going to have to be because the intraday action in terms of volume is pushing us up there, not because of any fear component that these folks are going to lose their moneyness for the 0 DTE. So recapping this part of the opportunity, 59.15 we think is we're up onto this ledge, and then we think if conditions are correct that we could just grind upward here. So keep that in mind. We would want to be long from this area here and be looking to possibly take profits into to 59.50, somewhere in that zone. Keep a runner on just in case there's a lot of market action. We'll be watching vol U and vol D, vol M, all of those to look and see what Monday looks like, what the rest of the day looks like, and these are also automated for the gold and the legendary members to print every 5 minutes. So you can just go glance at those or open those up in a separate page and watch them. Failure to push the ball up this gradient means you could most likely go short on any failure here, and the downside target would be to the bottom side of the ledge here. So we actually think you can make money in both ways this way today. We'll just see what happens, right? If we don't get up here, obviously it's a fait accompli. But if we are able to get up onto this ledge, we do think there's an opportunity to make money on the upside as well as the downside. Now, let's take a look and see what's happening here. Last I checked, we were projected, okay, it's a little bit weaker. We were up about 15, 20 points. Now we're coming back in terms of the expected move. So if we, take 15 points, we add it on to here. This puts us up at 58.85, which is going to be right underneath the GEX transition. We are squarely in a low pressure area. Noise. We expect if we can't get above that 5,900, that's actually a fairly significant level. As you can see, 2,000 net contracts on the call side here. We're in a negative gamma condition. So there's just headwinds. There's just a lot of pressure. We got decaying calls in the overhead, a fairly significant amount. And we've also got in the money puts. And so from a charm perspective, we've got huge contributions from decaying calls right now, which are outpacing the support that we're getting from the puts that are down here, and it's just going to be a very heavy structure. We believe the only way we're going to overcome this is through intermarket action. So watch vol M, watch vol D, and watch for activity that's going to push us above that 5,900. If we can't get above 5,900, we'd be inclined to look at, okay, where could we go to? And the first opportunity that we see to short this 58.90 or 58.80 area, we think if we break this 58.80 area, then we kind of leapfrog down and just cascade on down to what we call a gamma node and a delta node that's down here. We had one that's up here, that's on the put side. We have them down here, that's on the call side. These are another areas where there's a what we call a local zero. And this would be a resting spot. So falling from this area down into this price where there's virtually no pressure whatsoever would not be unexpected. Whether or not the buyers step in and try to pull us out of this is TBD. We have no clue what market speculation is going to do, right? It's just really fear and greed from market participants. If we still get opening puts, again, watch vol M and watch for those downward sloping chopsticks, we could start pushing down here towards this 58.20, and we see this nice gradient that forms as we break free of this. We're up onto a ledge, just kind of that same concept here as a ledge up here. We've got a ledge from a zero all the way up to a fairly significant amount of OI. If the market is opening puts or closing calls, then we're up onto the ledge and we could just push right on down. Now this 3179 that you see here and the 7900, these are large levels to the downside. It's going to take a lot of action, and we think there's going to be a lot of folks wanting to monetize as we get down into this area, and a monetization of puts into this area, especially if they're opening them up here, which pulled us down here in the first place, they'll probably cause a reversal and come up. At any stretch, we don't think we're going any lower than 5,800 today. And we would be short out of a break of DS lower here to take advantage of this push down into this area. We don't think we're going there. We think this is going to hold. We think this gradient is too large to overcome to the downside, but play it accordingly. The DS, the drunken sailor range, where we could just meander around, as shown in the yellow box, we think we could be back and forth, literally like a drunken sailor carrying a bottle of whiskey, right? So just be careful in these areas. There's some big numbers in here, and we're going to ping pong around within this area, depending on how strong market action is today. A key thing to take advantage of is that we have pretty high confidence in the structure today. We've got 579,000 contracts that are expiring. That's a good significant number. Normally it's around 200,000. So when we see this, we have greater confidence in what the structure is and how sticky it's going to be. We do note volatility as priced by the market is still up. This is the at the monies. This is an elevated amount. This really makes it hard to make upward progress, and we are still in a overall, there is more net negative gamma in the structure than there is call. In that scenario, effectively we've got downward pressure that's occurring. One last thing just to take notice of, I already talked down here about the net stato inlay. Net Vanna, I've colored green here because we're in a condition where we actually, if we do break above this 5,900 level, we could actually see a considerable amount of rallying support through Vanna contributions. And the reason I bring that up, let me just go over here and we'll take a look here at volatility real quick. So volatility is not really moving around. It was much higher. This is where it closed yesterday, and we're now decreasing in overall net volatility. When you decrease in volatility, you're effectively bringing the range that Vanna can influence in, and you're magnifying. It's like squeezing a balloon, much like what Gamma does. You're squeezing a balloon and causing it to amplify the effects. So what happens in a rally? Let's go back to where we just were. That's where we just were. This is where we just were. So in a rally, we actually are closing calls. So we're basically, even though we're amplifying this left-hand plane side, we're actually closing calls in real time. And you'll see that with an upward sloping put centroid in the vol-m command. And if we have a upward sloping call line in the vol-m command, that's telling us most likely, if price is confirming, that we're pushing upward. That means out of the money calls are going in, so we're pouring fuel onto an already amplified right-hand plane as we move up, and we believe that is the mechanism that leads to a Vanna rally. So be aware of that and just be on the lookout for that if we get above 5,900 and we have decreasing volatility, and I watch the VIX term structure at VIX Central, you can see, by the way, last is the blue here, and you can see we are dropping. And for those of you who are wondering, I did get into a number of VIX contracts at VIX puts yesterday at 18. We'll see where those are here in the morning. Right now they're underwater, but they expire next week, so I've got some time on that. So we'll just see what happens. If this continues, if this condition continues where we've got a drop down in volatility, and now this is the cash VIX right here, which is below all of this, so we're expecting to roll down the term structure and to this intersection of cash VIX and that front month. That's where realized volatility meets implied volatility. Life is good. That's called contango. Yesterday when we put that trade on, actually cash VIX was up here, and the expectation is that volatility was going to come out of the complex and roll on down. So we'll continue to watch this and see what happens, but I do think for all intents and purposes we could see a setup above 5,900, pushing up into 59.15, and then if we break 59.15 from below, we're going to be really, I think, a good opportunity to push higher and take advantage of that. So with that, I'll pause here and give you time to digest that, and we'll get ready for the open. Thanks, everyone.